Hello students, my name is Krunal Patel and welcome to Sri Jendra's Rank Zone classes. I am your mentor with respect to paper 1 of CA Foundation course, that is Principles and Practice of Accounting. In last session, we had discussed most important aspect of paper 1, that is accounting concepts. Based on said topic, that is accounting concept, today we are discuss first of all various illustration, that is MCQs and theoretical part of question given by ICAI in study material, and then after we discuss one small and less important topic, that is in AS, in Indian Accounting Standard. So first of all we started example based on the accounting concept. First MCQ is, all the following items are classified as fundamental accounting assumption except all the following items are classified as fundamental accounting assumption except consistency, business entity, going concern. Here question to be asked in negative manner, that is we have to find out the option which is not correct. That is, first of all try to recapitulate the fundamental accounting assumption, friends. There are three fundamental accounting assumptions: going concern, consistency and accrual. So here which of the following option is not the fundamental accounting assumption, friends? Yes, business entity. Second, two primary qualitative characteristics of financial statement are two qualitative characteristics of financial statement are understandability and materiality, relevance and reliability, neutrality and understandability. All are the qualitative characteristics of financial statement, but out of which four characteristics are the primary characteristics. Which are they, friends? First is understandability, relevance, reliability and comparability. So here out of the three option number 2 consists of both the primary qualitative characteristics, that is relevance and reliability. Next, Kanika Enterprise follow written down method of depreciating machinery year after year due to comparability, convenience or consistency. Which of the correct answer, friends? Written down value of depreciating machinery is the accounting policy of Kanika Enterprises. So accounting policy of Kanika Enterprise is being followed year after year due to which approach? Yes, consistent approach. As consistency means accounting policy should be followed in a consistent way from time to time. So Kanika Enterprise follows the written down value method of depreciating machinery year after year due to consistency approach. Next, purchased a car for rupees 5 lakhs making a down payment of rupees 1 lakh and signing a 4 lakh bill payable due in 60 days. As a result of this transaction, total asset is increased by 5 lakh, total liability increased by 4 lakh, total asset is increased by 4 lakh with corresponding increase in liability by 4 lakh. Here, which of the correct answer? Here, A purchased a car of rupees 5 lakh, making a down payment of rupees 1 lakh, signing a 4 lakh of bill payable, that is current liability due in 60 days. As a result of the transaction, A's total asset increased by rupees 4 lakh, that is a car, with corresponding increase in liability by rupees 4 lakh, that is bills payable. So correct answer is option C. Next, Mohan purchased goods for rupees 15 lakhs and sold 4/5 of these goods amounting to 18 lakhs and made expense amounting to 2.5 lakh during the year 2020. He counted net profit of as rupees 3,50,000. Which of the accounting concept was followed by him? Friends, kindly consider or recall the concept of matching, under which we have discussed expense income and expense for a particular period are to be compared to getting out the net result. Here, Mohan had applied matching concept to determine net profit, that is final outcome of rupees 3,50,000. Next, a businessman purchased goods for rupees 25 lakhs and sold 80% of goods during the accounting year ended 31st March 2020. Market value of the remaining goods, that is goods lying in the stock, was rupees 4 lakhs. He valued a closing inventory at cost. He validated a concept of money measurement concept, conservatism concept, or cost. Here, as per a concept of money measurement, realized profit shall be realized only when it is received. So 20% stock lying in this stock, that which means remaining goods for which cost would be 80% of 25 lakhs. 25 lakhs into 80%, that is sorry, it's a 20%. It's a 20% because 80% sold there, so we have only 20% goods in the stock. So 5 lakh value of cost of stock in trade, whereas market value of the stock is 4 lakh. So as per the money measurement concept, assets should be realized, assets should be recorded or recognized at the lower of cost or market value, that is market value of rupees 4 lakhs. So here Mr. A businessman, validated the concept of money measurement. Next, sorry friends, wait a minute. Sorry friends, we have a mistake here. Correct answer is conservatism approach. As conservatism approach consider the ignorance of the unrealized gain or losses. Any decrease in value of asset shall be recognized as per the conservatism or prudence approach, as we discussed in last lecture. So current asset should be recognized at the cost or market value, whichever is lower. So here Mr. A businessman violated a principle or concept of the conservatism. Next, capital brought in by the proprietor is the example of increase in asset and increase in liability, and decrease in asset, and decrease in liability. Here, increase in capital brought by proprietor is an example of. Here, capital brought in increase the current asset, as is increases the cash and bank balance of the firm, whereas it also increases the capital account, that is liability side of the balance sheet. Liability of the proprietor. So correct answer is answer A. It increase the asset as well as increase the liability. Next, assets are held in the business. For the purpose of earning a revenue. So correct answer is option C. Next, revenue from sale of products is generally realized in the period in which cash is collected, sale is made, or products are manufactured. Revenue has been recognized on the base when the sale is made, that is revenue is accrued. So correct answer is answer B. Next, concept of conservatism applied to the balance sheet result in understatement of asset, overstatement of capital. Applied to balance sheet result in understatement of asset, because under this approach any increase in the value of asset shall be ignored unless and until it is realized. So concept of conservatism result in understatement of the asset. Next, decrease in amount of trade payable result in decrease in amount of trade payable. Trade payables means current liability. So decrease in current liability result in increase in cash, decrease in bank overdraft, or decrease in asset. Here, decrease in trade payable, that is result from money outflow, so it is a decrease in asset. So correct answer is option C. Next, the determination of the expense for accounting period is based on the principle of matching concept. Determination of expense based on the recognized revenue. So as per the matching concept, all the expense and income during the accounting period are matched with each other is based on the principle of matching. Next, economic life of an enterprise is split into periodic interval to measure its performance is as per which concept, entity concept, matching concept, or periodicity concept. Here, economic life of enterprise split into periodic interval due to periodicity. Due to periodicity concept. Next, if the individual asset is increased, there will be correspondent increase in another asset or increase in the capital, decrease in another asset or increase in the liability, decrease of the specific liability or decrease of capital. So, any increase in asset, there is a decrease in another asset, or alternatively, or it also increase in the liability. So option B is the correct answer. Next, purchase of machinery for cash, decrease in total asset, increase in total asset, retain total asset unchanged. Here, purchase of machinery increase the fixed asset, increase in the fixed asset, and purchase of machinery in cash which decreases the cash balance or the current asset. So one increase in the fixed asset and decrease in the asset. So return total asset should be unchanged. So correct answer is answer C. Consider the following data pertaining to Alpha Limited. Cost of machinery purchase is 10 lakh rupees. Installation charges is 1 lakh rupees. Market value of the machine as on the end of the year is 12 lakh rupees. While finalizing the annual account, company value machinery at 20 lakhs. Which of the following concept is violated by the Alpha Limited? Friends, kindly recall, it's a cost concept because machinery is recorded or fixed asset is being recorded at installation or acquisition or historical cost and not at the market value. So, measures Alpha Limited violated the concept of cost. Next, some theoretical question. Now we discuss. Write a short note on the fundamental accounting assumption. As we know, there are three fundamental accounting assumptions: going concern, consistency, and accrual. Second is periodicity. Here, periodicity means accounting statement prepared from time to time and not at the end of the life of the entity. Next is accounting convention. Accounting convention emerges out of the accounting practices, which are commonly known as accounting policy. Accounting policy adopted by various organizations from time to time. Next, difference between money measurement concept and matching concept. Money measurement concept recognize the transaction which are capable of being deal with the money or consider in the money, whereas matching concept, all the expense and income for a specific period are matched with each other. Similarly, going concern and cost concept. Under going concern, it is assumed that business should be in presence in near future. So financial statement are being prepared on the assumption that going concern has been followed. If going concern is not followed, it requires the specific disclosure in the financial statement. Cost concept. Consider the recognition of asset at its historical cost or acquisition cost. Next is briefly explain the qualitative characteristic of the financial statement. as we already discussed the detailed qualitative characteristics of financial statement. Which are they, friends? Understandability, relevance, reliability, comparability, materiality, faithful presentation, substance over form, neutrality, prudence, full disclosure, and last but not the least is completeness. So friends, we have discussed all the questions given by ICI on the topic accounting concepts. This is the most important part of the syllabus. Now we are taking one small topic considered as the Indian accounting standard, which is considered as less important part of the syllabus. So kindly attention here, friends, and then after no need to study this topic in detail at your home. What are the Indian accounting standard, which is commonly known as IND-AS? IND-AS are the International Financial Reporting Standard. That is IFRS. Covered standard issued by IND-AS is a covered standard issued by Central Government of India under the supervision and control of the Accounting Standard Board of the ICAI, and as well as in consultation with the National Advisory Committee on Accounting Standard. So IND-AS are the IFRS covered standard issued by the Central Government of India under the supervision and control of the which board? An Accounting Standard Board established by the ICAI and in consultation with the National Advisory Committee on Accounting Standard. Such committee recommend this standard to the Ministry of Corporate Affairs, that is MCA. MCA has to spell out the accounting standard applicable for the companies in India. The IND-AS are named and numbered in same way as with corresponding international financial reporting standard. So here given the list of IND-AS, that is list of Indian accounting standard. Here only list of IND-AS is a part of the syllabus of say foundation paper 1. So friends, it is not relevant for exam point of view. On the day of examination, no need to study this topic, that is Indian accounting standard. So do not waste time or crucial time on the day of examination or at the time of revision as well. So friends, today lastly we consider the multiple choice question. Question of based on the Indian accounting standard, and thereafter we conclude today's session. Global standard facilitate cross-border flow of money, global listing in different bourses, comparability of financial statement, or all of the three. So global standard facilitate the cross-border flow of money, global listing, as well as comparability of financial statement as well. So correct answer is option D, all of the three. Government of India in consultation with the ICAI decided to adopt with IFRS, converse with IFRS, apply IFRS in India, or notify. So correct answer is converse with the IFRS. Converse with IFRS simplifies the procedure of preparing the financial statement, reducing the cost of preparing the financial statement, both A and B, and last is facilitate global investors understanding and confidence in high quality financial statement. So correct answer is Answer D. Con- Convergence with IFRS facilitate global investor understandability and confidence in high quality financial statement. So friends, we conclude today's session with one small less important topic called Indian accounting standard. Thank you friends.